What if we were able to revolutionize the finance world, where old procedures and paperwork are replaced with newfound teamwork, creativity, and speed? Where one day mutual trust will bring fraud and crime to rest in a highly secure shared view of facts. Guess what? It's already happening. Through the blockchain technology, leading financial companies are trailblazing the path forward, working together to reduce long standing friction, entrench uncertainty, to develop innovative approaches to produce measurable business results. Now it's your turn to join them. The blockchain technology is a system that stores transactional records of public in many databases, known as the chain, in a network linked by peer-to-peer nodes, also known as the block. This data is usually defined as a digital ledger. Any transaction in this ledger is approved by the digital signature, which authenticates the transaction and prevents it from being tampered with. Hence, the information stored in the digital ledger is highly secure. Simply put, the digital ledger is like a Google spreadsheet shared in a network among various computers where transactional records are kept based on actual transactions. The intriguing angle is that the data can be used by anybody, but they cannot manipulate it. A blockchain is thus a database which is accessed over a computer network, which is incredibly difficult to alter once the record has been attached to the chain. The network makes regular searches into the copies of the databases to ensure that all the copies are the same. Blockchains have been used to support cybercurrency such as Bitcoin, but there are also other potential applications. Now that we know what blockchain technology is, the importance of bringing it into the world of finance and using it for further developments is very evident. It gives us more security. It is a more transparent technology, which makes it a more trustworthy technology for financial dealings. It is more programmable, which means it supports the creation and execution of smart contracts. These contracts are tamper proof, which gives them more trust and efficiency. It gives us more privacy. It is a high performance technology which makes other dealings also high performance. It has more scalability, which means that it supports interoperability between private and public chains, offering each enterprise solution to global reach, tremendous resilience, and high integrity of the mainnet. According to a report by Jupiter Research, blockchain deployments will enable banks to realize savings on cross border settlements, transactions of up to $27 billion by the end of 2030, reducing the costs by more than 11%.
The first business case that we will be discussing comes from ANZ, or the Australia and New Zealand Banking Group Limited. ANZ is a multinational banking and financial services company that is headquartered in Melbourne, Australia. The case uses the key blockchain benefits such as a distributed ledger technology, wherein the ledger is distributed among all the network participants, wherein the records are immutable, and the smart contracts that blockchain technology offers. Now, what ANZ wanted to do is it wanted to use the distributed ledger technology to digitize the financial guarantees that exist between the landlords and the tenants in a commercial property leasing. ANZ here wanted to achieve a proof of concept project wherein they could streamline this burdensome and paper heavy process. Hence, with a consortium of Westpac Bank and a shopping center as well as IBM as the development partner, they now have a single source of information that all the parties can access, which increases efficiency and reduces the potential for fraud. This addresses a pain point for the retailers across Australia and New Zealand who depend on bank guarantees in lieu of cash deposits or bonds. Whenever a retailer wanted to lease a property to open a store, for example, the landlord required an unconditional bank guarantee. Now, this guarantee is a physical piece of paper, and the transaction to obtain it can take weeks. Thus, the landlord had to store and manage these documents and reconcile them manually against the leases. Also, whenever the terms changed, this process had to be repeated. To simplify this process, a distributed ledger was used. A tenant could request the guarantee from an online platform, and the landlord could adjust the terms in the same platform for the tenant as well as the bank to review. When all the parties agree on the contract, the document is stored on a blockchain ledger and the transaction is thus stored in a secure, immutable, and transparent way, which is accessible to all the parties. Any changes in the rent or any other changes can be similarly negotiated through the online process. Also, the documents are certified on the blockchain technology and hence it can prevent from frauds. The landlords, instead of keeping a lot of papers, can now store everything using the blockchain as well as reconcile rents using this digital medium. Blockchain thus makes this process simpler as well as faster.
I am going to talk about the second business use case, which is about how IBM and Twiga Foods introduced blockchain based microfinancing for food kiosk owners in Kenya. Late last year, Nairobi based Twiga Foods, a B2B logistics platform for kiosks and food stalls in Africa, was looking to expand its logistics services into a total market ecosystem by adding financial services for its clients. Grant Brook, co-founder of Twiga Foods, formed a collaboration with IBM scientists in Nairobi to build and test a blockchain-enabled finance lending platform. They analyzed purchase records from a mobile device and then applied machine learning algorithms to predict credit worthiness, in turn, giving lenders the confidence they needed to provide microloans to small businesses. Once the credit score was determined, they used a blockchain based on the Hyperledger fabric to manage the entire lending process from application to receiving offers to accepting the terms of repayment. With blockchain, the lending process became transparent to all permissioned parties involved, from the lending bank to the borrower's bank and the loan applicant themselves. Blockchains are immutable, helping to reduce fraud since no one single party can append the blockchain without consensus from the entire network. Finally, blockchains employs a series of smart contracts which can be executed in real time, having the potential to significantly reduce the time it takes to manually process and issue a loan.
Before we talk about the usage of blockchains in the financial industries, let's have a look at this graph. So, if you look at this graph, then it shows that the blockchain development and advancement into the various sectors. So, you can see that the financial service uses it at 46%, and it is the clear winner. As you can see, that the other six industries lies far behind. The industrial product has 12%, energy and utilities has 12%, healthcare has 11%, but financial services has 46%. So that is the percentage that the industry is using blockchain into its services. So talking about the first service, that is the international payments. So if we talk about the international payments, then the use of blockchain provides three competitive advantage to the company. So first is the reduction in the intermediaries. So if the blockchain technology is being used into international payments, then there is less of intermediaries which are being used in the process. So reduction in intermediaries would obviously result into cheaper payments being made. So the second advantage is the efficiency and the cheaper payments that are being made by the use of blockchain in the payment industries. The third is the reduction in the manually settled transactions, because if the blockchain is being used for the processes and the payment, so there are a reduction in the manually settled transactions by the company, and that is one of the greatest advantage that the blockchain provides. If we talk about one of the example of the usage of blockchains in the payment, so the first one is the OnePay FX being used by the Santander. So Santander is the first company to bring the usage of blockchain into international payment. So OnePay FX is the service that is being brought up by Santander. So the Santander is basically using it in currently into 4 countries, that is US, Brazil, Spain and Russia. And these services are being used extensively by its customers, and the customers are quite happy with the OnePay FX services, which is using blockchain for the international payments, as it has been proved to be more efficient and cheaper for the company as well as for the customers, and it is running well. So this is one of the example of how blockchain is being used in the international payments.
So another use of blockchain based systems would be in capital markets. So Blockchain-based system has the ability to transform the capital market industry in many ways by directly impacting the risk involved in the capital markets and reducing the significant cost that is being beared by the industry. And this blockchain application would involves tokenized transfers between directly between the payer and payee, which reduces or which eliminates the liquidity and credit risk that is involved in those transactions. So benefits that this would provide are faster clearing and settlements, reduction in systematic risk, and operational improvements. Another use of this distributed ledger or blockchain system is trade financing. So under trade finance, historical methods shows that there is a larger documentation that is being involved in the trade finances when it comes to cross-border trade financing. So when we use blockchain into that system, it streamlines the trade finance deals and it simplifies the process across borders.
We'll now look into the two original cases where we think blockchain can be implemented in banking and financial institutions. The first is serving the unbanked people. We all know that about 2 billion people in the world do not receive banking services, and they are charged predatory interest by the money lenders. We think that blockchain can help them build a decentralized lending network. So a blockchain model can be made where the first block will consider all the demographic details. The second block will consider the machine learning models, which will be worked upon by different coders and different data miners across the world, who will give the output to all these microfinance institutions, rural banks, FPOs, and development financial institutions. These eventually get the money from the national banks. Now, when these people target the poor people, they provide them with banking services, and whatever update they have on the demographic details, it will again be fed back to the same block. And this process keeps iterating. This way, the number of people who come under the banking services can be improved. The second original case, what we think is Bitcoin, which is a part of blockchain as a cryptocurrency, can be used for hedging. Now, if you see, on March 2017, Bitcoin had crossed the value of gold, almost had touched it. And after that, what has been happening is, if you see from timeline from 2012 to 17, dollar index, which is given by the green graph, gold, which is given by the orange graph, and Bitcoin by the blue graph, you see that the inverse correlation between dollar and gold had broken at this point. At this point, this inverse correlation didn't hold good. However, when Bitcoin, if you put Bitcoin into the graph, you see that this exact is somewhat going in the direction. So this can be used. Now, if you see a case where if you see the Venezuela dollar and the Bitcoin value and the Venezuela inflation, you will see that the Bitcoin and the inflation rate is actually inversely related in some way. This can be worked on. Already a lot of work is going on. We can use the NDCC Garch model, on which we can use this to see where real correlation exists. The final one, we can see the Bitcoin and gold rolling day correlation. On 2018, they had actually shown a typical correlation which can be used for a hedging instrument.